Welcome to Metals, Money, and Markets. We're February 9th. For MiningClips.com, I'm Rob Goodman, and as always, Mickey Fulp, the Mercenary Geologist, is going to break this down. All right, Mickey, markets here, a lot of volatility up and down. Why don't you put some sense to this? What's going on?
Well, we actually reached a market correction in the U.S. major markets, down 10% from the high. Combinations of factors, extreme volatility, inflation's concern, which led to interest rate rises, new Fed chairman coming in, no one knows what he's going to do, and algorithm trading, and a bunch of irrational exuberance by people that didn't belong in the market who got in at the top. All that weighed in on everything for the week. All the metals and especially energy issues were really hard hit. It's pretty amazing what happened. Gold, 13.16 down 1%. Silver, 16.33 down 1%. Platinum, down 2.4% to 963. Palladium, down a whopping 6.6%. It's basically tracking the major markets. And we told people a couple of weeks ago this platinum palladium ratio would correct, and it has. It's plus or minus one now. The industrials, the platinum, oil, all trading in time with the major markets. Copper a little bit less so, but it's in 3-month backwardation, lost 12 cents over the week. It closed at 306.
And moving on to those energy markets, really rough week here. Oil leading the way down here.
Yeah, there was some interesting news from the oil markets, but energy stocks basically were off even more than major markets. WTI fell over 9% for the week to close at 59.05. U.S. production hit a record at 10.3 million barrels a day, jumped up basically 400,000 barrels over the last month or so. Rigs up 29, a whopping 29 more oil rigs added this week. China is now the world's largest oil importer. Just goes on. And finally, uranium has broken down. It's below $22, closed the week at $21.33 for a 5% loss.
And shifting gears into the currencies, a nice little rally for the U.S. dollar here, and of course the euro and loonie suffered against.
Yeah, DXY made a big recovery for the week, up to 90.41 for a 1.5% gain. That's a huge move for currency market. Stronger, but is still at a plus 3-year low. Euro, of course, was down to 3 cents to $1.22 for almost a 2% loss. And finally, the loonie fell below 80 cents. You know, it was well above 81 cents 2 weeks ago, closed at 79.5 for a 1.3% loss. And that really has to do with the turmoil in energy markets, and especially Canadian oil sands and the pipeline issues that they have. Ontario, the Ottawa government came out this week, and they've got new environmental assessment rules. So if you're going to build an energy infrastructure, say a pipeline, it now includes health, social, and economic benefits or detriments, including they have to do a gender impact analysis for any infrastructure build out, whatever the hell that means, Rob.
Well, let's finish up with these equity markets here. Quite a roller coaster ride. A lot of volatility here. Why don't you break these things down?
Yeah, we could say V is for volatility if anybody's a fan of Sue Grafton detective novels. The VIX spent the week at plus or minus 30. We have not seen this since the Chinese stock market crash in August of 2015. You know, I wrote a piece about 5 or 6 years ago called Embrace Volatility. It's on my website if anybody is interested. I love volatility because it gives you entry and exit points in the market. U.S. markets, the Dow, the S&P 500, Both did their 10% correction. NASDAQ did just less than a 10% correction. I think the rapidity of this is probably what's unusual. It all happened in 10 days total, but most of that volatility's been in the middle 5 days of this. Dow closed at 24,191, down over 5%. S&P 2620, again over 5%. NASDAQ 6874. Get this, Rob, again down over 5%. We needed this correction. We've been calling for it for 3 or 4 years. We really haven't seen declines for going on 6 years now. So I look at this as good.
Yeah, tremendous reversal on Friday, too. Finishing up with the venture here, it actually survived this to get a little in the black.
Well, I'm going to say something that might be a little bit controversial, but I think the TSX Venture Exchange, once again, was the canary in the coal mine. This meltdown began 1 month ago, yesterday or today, with the cryptos and the weed stocks cratering. The TSXV went from 940 to 813 for a 13% loss. That's where it closed today. Actually was up 1 point from last week. Volumes are less than 50% of what they were a month ago. And the Toronto Big Board also took quite a hit over the last couple of weeks.
All right, Mickey, we'll keep our eye on this wire here. A lot of volatility. We'll see if it continues into next week. So enjoy your weekend, and we will catch you next week.
All right. Thanks a lot, Rob.